Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Friday morning pre-market webcast. Well, just when you start to count the bulls out, here they come. We had basically a straight up day yesterday, and just as we started to give some of it back from 13.21 down to about 13.14, this news came out that the central banks were ready to make coordinated efforts basically to prop up Greece no matter what happens in the elections this weekend. So that really buoyed the market, and what we're seeing now is, we moved up to the 27 area, which was the 45-day pivot yesterday, and we bounced around there into the close. But through the Globex session, we've seen nothing but strength, and it's moved up to today's 45-day pivot, which is 1333.17. That also coincides with the 50-day exponential moving averages in the ES, the 50 and the 100 EMAs. We've backed off a little bit here, but here's my take. I think that over the intermediate term, we're going to go down and test those lows below 1300. What is critical now, if you're a bull, at this point, we've moved up to 33, to two moving averages and the pivot. You've got 1342 sitting up above. You have to go take out 1342. If you put in a lower high, it's going to set up the bears for some momentum down towards the 1300 area. So I think we're at a key time. Today is options expiration. I personally don't trade much on options expiration day, just because I have found that the tape gets more whippy and less predictable, and for my style of trading it doesn't really work. So I'll probably do a few trades today, but not a whole lot, and I'll pick things up on Monday. But watch the 1333 area on the upside. On the downside, we've got double pivots again at 1309.92, and that would prove to be a nice area to buy a dip if we sell off pretty hard today. But that's 24 handles away. So we did see some support overnight at 1326, so you would want to take a look at that level as well. A lot of economic news today. We've got Empire Manufacturing is out. You've got industrial production, that's at 9:15 Eastern, and then you've got Michigan sentiment at 9:55 rather. So there's a lot of economic reports that could potentially move the market as well. So, I always say use stops and be hedged, and there was nothing that the market could do to better illustrate that piece of advice than what happened yesterday on that headline. We went from 1315 to 1327 in the blink of an eye. And nobody likes to get stopped out. But what you don't want to do is not have a stop on, get up to 27, and yes, it came back to 18. But what if it doesn't? What if it just keeps going? What if we're sitting at 1333? So you got to use stops in this headline environment. It's a headline minefield. You never know when the next one's going to come, and you don't know what the reaction to it is going to be, whether it's positive or negative. So, you've got to use stops. To the extent you need to be hedged, you need to do that as well. And it's not a time to be putting really big bets on the market, because you just don't know where the next headline is coming from. Okay? So everybody have a fantastic weekend. I'll be back Monday morning with another webcast. Mike Vacchi, Princeton Trader. Trade 'em well, everybody.